Hey everyone, this is C Crypto Daily Buzz. Today is Friday, March 13th, 2026, and this channel brings you the most important crypto news for investors across Southeast Asia. We've packed 6 major stories for you today, so let's jump right in. Institutional money is flowing back into Bitcoin at a pace we haven't seen in months. US spot Bitcoin ETFs just posted their third straight day of net inflows, with BlackRock's IBIT alone pulling in over $115 million on March 11th. Fidelity added another $15 million, while Grayscale's older GBTC fund continued to bleed, though at a much slower rate than before. The combined March inflows have now crossed roughly $700 million, ending a 5-month stretch of outflows that drained nearly $3.8 billion. Total assets across all US Bitcoin ETFs now sit around $62 billion. My take on this isn't just a one-day bounce. 3 consecutive days of net buying, led by the world's largest asset manager, signals a genuine shift in institutional positioning. What makes this even more interesting is the context. Bitcoin has been outperforming gold by about 12% over the same period, which suggests smart money is treating BTC as the higher conviction play right now. For investors in Southeast Asia, this matters because ETF demand directly affects the global BTC price floor. If this pace holds through the Fed decision on March 18th, it could set up a significant breakout above the 74,000 level. But keep in mind, JOLTS data drops today, and a surprise reading could reverse this momentum quickly. The legal saga of FTX founder Sam Bankman-Fried just took another major turn. U.S. prosecutors filed their response on March 12th, formally opposing SBF's request for a new trial. They argue he has completely failed to prove any unfairness in his original conviction. SBF was initially sentenced to 25 years in prison and ordered to forfeit over $11 billion. His appeal led to the conviction being overturned, and his defense team then filed for a retrial citing newly obtained testimony. But prosecutors are pushing back hard, calling the original proceedings fair and well conducted. My honest assessment: even though the conviction was technically overturned on procedural grounds, the core fraud allegations remain extremely strong. The $11 billion forfeiture number alone tells you the scale of what happened here. What's worth noting is that prosecutors clearly feel confident. They're not negotiating or offering lighter terms, they want the original verdict to stand. For retail investors across the Philippines, Vietnam, and the rest of Southeast Asia, this case remains the biggest cautionary tale about centralized exchange risk and why custody of your own keys still matters. If you're holding funds on any exchange, make sure it's properly licensed and regulated in your jurisdiction. Hong Kong is about to issue its very first stablecoin licenses, and the applicants include some of the biggest names in global banking. HSBC, Standard Chartered, and Bank of China are among the leading contenders, with the Monetary Authority expected to approve 3 to 4 issuers from a pool of 77 applicants. Requirements are strict: 25 million Hong Kong dollars in paid-up capital, 100% reserve backing, and 1 business day redemption guarantees. HSBC's CEO confirmed the bank is in active discussions with regulators, calling Hong Kong's framework sound and innovation-friendly. My personal read on this: when traditional banks like HSBC and Standard Chartered start issuing stablecoins, it legitimizes the entire asset class overnight. This isn't some crypto startup experiment. These are trillion-dollar institutions entering the space under strict regulation. One detail that stands out: unlike the EU's MiCA framework and the US Genius Act, Hong Kong's rules don't explicitly ban yield on stablecoins. That could create a regulatory arbitrage opportunity where issuers offer products in Hong Kong that wouldn't be allowed in Europe or America. For Southeast Asian investors, this move could set the template for stablecoin frameworks across Singapore, Thailand, and the Philippines. Keep a close eye on how this shapes cross-border remittance and OFW payment channels in the coming months. We still have 3 more important stories to cover. Let's continue. All right, let's move on to the next 3 stories. Polkadot is executing the single biggest economic change in its entire history tomorrow, March 14th. Annual token issuance will be slashed from 120 million DOT down to roughly 55 million, a 53.6% cut that takes effect immediately. The community also voted to impose a hard supply cap of 2.1 billion DOT, replacing what was previously an uncapped inflationary model. The annual inflation rate drops from about 10% to just over 3% overnight. The date was chosen deliberately. March 14th is Pi Day, and the entire reduction formula is built around the mathematical constant 3.14, with emissions decreasing by 13.14% every 2 years going forward. My take on this: from a pure tokenomics perspective, cutting new supply by more than half while introducing a hard cap is extremely bullish long-term. It mirrors Bitcoin's halving logic, but on a faster cycle. DOT also recently got an ETF listing, which adds a regulated demand channel that didn't exist before. For Southeast Asian investors watching altcoin opportunities, this is one to monitor closely. Supply reduction plus ETF access is a powerful combination. South Korea's crypto market could be on the verge of a major structural shift. DWF Ventures released a report highlighting that Korea, with its 18 million cryptocurrency investors, is one of the most promising markets globally for a won-denominated stablecoin. The concept would reduce the country's heavy reliance on US dollar-based stablecoins and help control capital outflows. The Bank of Korea favors a bank-led consortium model for issuance, while fintech advocates are pushing for a more open regulatory sandbox approach that would let licensed blockchain companies participate. My personal read on this: Korea already has one of the highest per capita crypto participation rates in the world, and a native won stablecoin could fundamentally change how Korean investors interact with DeFi and cross-border markets. For the broader Southeast Asian ecosystem, this matters because Korean trading volume heavily influences global altcoin prices. A stable, regulated Korean stablecoin could also open new trading pairs and liquidity channels that benefit exchanges and investors across Vietnam, Indonesia, and the Philippines. A security incident hit one of the Philippines' largest crypto platforms this week. Coins.ph confirmed that on March 8th, attackers gained unauthorized access to the platform's messaging system and sent phishing emails and push notifications to users. The messages tried to redirect people to a fake website impersonating Coins.ph, asking them to connect their wallets. The company's security team shut down all notification campaigns, took down the malicious website, and blacklisted the attackers' wallet addresses. Coins.ph confirmed that no user funds, passwords, or personal data were compromised. The breach was limited to the third-party messaging layer only. My honest assessment: even though Coins.ph acted quickly and no funds were stolen, this is a serious wake-up call for Filipino crypto users. Phishing attacks are becoming more sophisticated, especially with AI-generated deepfakes now being used in scam operations. Always verify any communication directly through the official app. Never click links from emails or push notifications asking you to connect wallets or enter credentials. This applies to every exchange you use, not just Coins.ph. Before we wrap up, here's a quick recap of today's 6 stories. Story 1. Bitcoin ETFs post 3 straight days of inflows, with over 700 million in March alone. Story 2. U.S. prosecutors oppose SBF's retrial request, calling the original conviction fair. Story 3. Hong Kong is set to issue its first stablecoin licenses this month to major banks. Story 4. Polkadot slashes token issuance by 54% tomorrow in a historic supply cut. Story 5. DWF Ventures highlights Korea's 18 million investors as ideal for a won stablecoin. Story 6. Coins.ph hit by a phishing attack targeting Filipino users through fake notifications. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please consider subscribing, liking, and turning on the notification bell. For real-time alerts and trading signals, join our Telegram channel, link in the description. See you in the next one.